Welcome back. Today, we are diving deep into something that every Kenyan investor, whether you are a seasoned trader or just getting started, absolutely cannot ignore. We are talking about the Safaricom share price on the Nairobi Securities Exchange, ticker symbol SCOM. And trust me, this is one of the most dramatic stock stories on the entire African continent. Dramatic is the right word. We're talking about a stock that went from 5 shillings at IPO, crashed to below 3 shillings, then climbed all the way to 45.25 shillings, and is now staging yet another comeback. If you have never tracked Safaricom quarter by quarter, buckle up. We are going to walk you through every major chapter of this story. Let's set the scene. The year is 2008. The Kenyan government is offering 25% of Safaricom to the public at a price of 5 shillings per share. 40 billion shares are issued, giving the company a valuation of 200 billion shillings at listing. On June 9, 2008, trading begins at the NSE in a ceremony opened by President Mwai Kibaki himself. The Safaricom IPO alone more than tripled the number of shares on the NSE, from 15 billion to over 55 billion shares overnight. Kenyans from all walks of life had piled in. And yet, the stock almost immediately started disappointing those early investors. In Q3 2008, the global financial crisis hit. Safaricom, which had listed at 5 shillings, was already trading in the 4 shillings range by the end of that year. Then in 2009, the stock dipped further, hovering between 350 and 450 shillings for much of the year as the market tried to find its footing. 2010 was a bit of a breather. The stock recovered slightly, trading in a range of roughly 4 to 550 shillings through the year. Earnings were improving. The company posted net income of about 7.6 billion shillings for the period ending September 2010. But then came 2011, and it was brutal. 2011 was one of the most difficult years in Safaricom's listed history. Q1 and Q2 of that year saw the stock stuck in the 4 to 5 shillings range. But by Q3, the combination of a brutal price war in the telecoms industry, sky-high inflation, rising interest rates, and a collapsing Kenya shilling sent the stock into free fall. Safaricom's earnings for the period to September 2011 crashed by 47.4%, from 7.6 billion shillings down to just 4 billion. The market reacted accordingly.
And that brings us to the worst day in Safaricom's history on the NSE, February 27th, 2012. The stock hit its all-time low of 2.85 shillings. Think about that. You bought at 5 shillings at the IPO. By early 2012, you had lost more than 40% of your money. Many retail investors panicked and sold. But those who stayed, or better yet, those who bought at 2.95 shillings, were setting themselves up for an extraordinary journey. Because from that floor, Safaricom began one of the most impressive recoveries in NSE history. By the end of 2012, the stock had clawed back to around 3.80 to 4.50 shillings. In 2013, momentum was building. Q1 saw prices in the 4.50 to 5 shillings range. By Q2 and Q3 of 2013, the stock was trading between 5 and 7 shillings. Investors who accumulated at the lows were already sitting on gains of 50% to 100%. And the story behind that recovery was M-Pesa. By 2013, M-Pesa was no longer just a nice side product, it was becoming the engine of the entire business. Its contribution to Safaricom's revenue was rising sharply. Add to that improving earnings and a recovering economy, and the stock just kept climbing. In 2014, Safaricom broke through the 7 shillings mark convincingly. Q1 opened around 7 shillings, and by Q3, it was testing the 10 shillings level. By the end of 2014, closing out around 10 to 11 shillings, the stock had roughly tripled from its 2012 lows. At that point, it accounted for only about 10 to 15% of the NSE's market cap. That number would grow dramatically. 2015 was another strong year. In Q1 of 2015, Safaricom was hovering around 12 shillings. By Q2, it pushed above 14 shillings. Q3 and Q4 saw some volatility, with the stock pulling back slightly to the 12 to 14 shillings range as some profit-taking came in and global emerging market sentiment turned cautious. But analysts at the time valued the stock's intrinsic worth at between 18 and 21 shillings, signaling there was still a lot of upside. 2016 was a period of consolidation. The stock traded in a relatively tight 13 to 17 shillings range through most of that year.
Q1 opened around 14 shillings, Q2 saw a mild dip to 13 shillings, and by Q3 and Q4 it was pushing back towards 16 to 17 shillings. Importantly, during this period, Safaricom overtook the banking sector to become the single largest contributor to NSE performance. It was now accounting for over 40% of the entire exchange's annual share turnover. Think about that. One company driving nearly half the market's trading activity.
Then came 2017, the year the bull really ran. In Q1 of 2017, Safaricom opened around 18 shillings. By Q2, it had crossed 20 shillings, a huge psychological milestone for Kenyan investors. Q3 saw it push to 24 shillings, and by Q4, it hit a then record high of 28.50 shillings in November of 2017. At that valuation, Safaricom's market cap had crossed 1.1 trillion shillings, and the company now accounted for an extraordinary 48% of the entire NSE's market capitalization. Almost half the market, one stock. A 5-year compounded annual earnings growth rate of 30.9% will do that to a stock. Investors were seeing the numbers and piling in. Data revenue had grown from contributing just 5% of total revenue back in 2013 to over 15% by 2018. M-Pesa was growing relentlessly, and foreign investors were taking notice too. In 2018, the stock took a breather after the 2017 surge. Q1 opened around 28 shillings and then drifted lower through the year. By Q2, it was around 24 to 26 shillings. Q3 and Q4 saw further softening, with the stock ending the year in the 24 to 26 shillings range. This was a classic consolidation after a big run-up. Nothing fundamentally wrong, just the market digesting the gains. 2019 was a recovery year. Q1 opened around 25 shillings. Q2 saw a modest push back toward 27 shillings. By Q3 and Q4 of 2019, Safaricom was trading around 27 to 30 shillings, ending the year with decent momentum heading into 2020. And then COVID-19 hit. March 2020, markets globally went into freefall. Safaricom was not spared, dropping from around 28 to 29 shillings in February 2020 to lows of approximately 23 to 24 shillings in Q1 of 2020. But here's the fascinating thing. Safaricom was actually a beneficiary of the pandemic in some ways. With lockdowns and social distancing, M-Pesa usage exploded. People who had never used mobile money before suddenly needed it. The company's digital payments business surged, and the market priced that in quickly. By Q2 and Q3 of 2020, Safaricom had recovered strongly, back to the 28 to 32 shillings range. By Q4 2020, it was trading around 32 to 35 shillings. The COVID correction had been brief, and the recovery... The numbers from that period are staggering. In Q2 2021, the stock shot from the mid-30s to above 40 shillings. Then in Q3 2021, the peak. On August 23, 2021, Safaricom hit its all-time high of 45.25 shillings. The company's market cap at that point was 1.72 trillion shillings, representing over 60% of the NSE's entire equity market value. Foreign investors were net buyers of nearly 1 billion shares in just a few days. The excitement was absolute. But then began the long, painful unwind. In Q4 2021, as the reality of what it would cost to build out a business in Ethiopia started to set in, the stock pulled back from 45 shillings to around 38 to 40 shillings. In Q1 2022, it dropped further into the low to mid-30 shillings. Q2 2022 saw it hovering around 30 shillings to 33 shillings. By Q3 2022, when the Ethiopia operation formally launched, the stock was in the upper 20 shillings, and the losses coming from the Ethiopian market started appearing in the financials. The decline deepened through 2023. In Q1 2023, Safaricom was trading around 25 to 27 shillings. By Q2 and Q3 of 2023, it had dropped into the 22 to 25 shillings range. By Q4 2023, the stock was testing the 18 to 20 shillings range, a painful 20 shillings psychological level that analysts identified as a critical battleground. At that price, the stock had lost more than 55% from its all-time high. The situation in 2024 was mixed.
In Q1 2024, the stock was trading around 17 to 19 shillings, actually hitting a 52-week low of 17 shillings. A brutal stretch for long-term holders. The Ethiopia losses were weighing on group-level profits. The Kenya shilling had weakened significantly, and interest rates globally were elevated. However, and here's where it gets interesting again, the underlying Kenya business was still performing. In early 2024, Safaricom declared an interim dividend of 0.55 shillings per share and then a final dividend of 0.65 shillings per share. The business itself was generating cash. And smart money apparently agreed, because from that Q1 2024 low of 17 shillings, the stock launched a recovery that has been nothing short of remarkable.
By Q2 2024, it had climbed back above 22 shillings. Q3 saw it push to around 25 to 27 shillings. By Q4 2024, it was trading in the 26 to 30 shillings range. And in Q1 of 2025, it accelerated further, pushing through 30 to the mid-30 shillings, with a 52-week high of 34.20 shillings. Let's put that in context. From the 17 shillings low to a peak of 34.20 shillings is a gain of over 100% in roughly a year. No wonder the stock has shown a 71.84% increase over the past year as tracked on TradingView. That is a serious return. And the market cap has recovered to over 1.19 trillion shillings as of April 2026, back to representing about 33.7% of the NSE. The financial results justify some of that optimism too. For fiscal year 2025, Safaricom posted total revenue of 385 billion shillings, an 11.35% increase year on year. M-Pesa revenue alone hit approximately 161 billion shillings. That is over 40% of total service revenue. Mobile data grew by 16.5%. Net income for the latest half year was 42.78 billion shillings, up from 41.68 billion shillings the prior period. The EBITDA margin is nearly 50%, an incredible level of profitability for any company anywhere in the world. And Ethiopia, the albatross that dragged the stock down from 45 to 17 shillings, is slowly turning the corner. Safaricom now has over 10 million, some reports say 11 million, customers in Ethiopia. The losses are narrowing. The long-term thesis, that a 110 million person market with almost no mobile money penetration is a massive opportunity, has not changed. As of April 2026, the stock is trading around 29 to 30 shillings, having started the year at 28.35 shillings. Analysts surveyed on TradingView give it a maximum price target of 44 shillings and a minimum target of 34 shillings, both well above current levels. The 52-week range has been 17 shillings on the low end and 34.20 shillings on the high end. The dividend yield is sitting at about 5.07%, with dividends paid twice a year. The most recent interim dividend was 0.85 shillings per share, paid in March 2026. Now, let's step back and appreciate the full journey in numbers. IPO in June 2008 at 5 shillings. All-time low of 2.95 shillings in February 2012, a 41% loss from the IPO price. Recovery to 10 shillings by end of 2014. Crossed 20 shillings in 2017. Record high of 45.25 shillings in August 2021, a 900% gain from the all-time low. And then the correction back to 17 shillings in early 2024, before recovering to around 30 shillings today. The market cap has grown from 294 billion shillings at listing to 1.19 trillion shillings now, a compound annual growth rate of about 8.16% since listing. And remember, those figures don't even include dividends. Safaricom has paid dividends consistently for many years, distributing 80% of net profit to shareholders. If you add the cumulative dividends received over the years, the total return to long-term Safaricom holders is significantly higher than the share price alone suggests. So, what does the future look like? There are genuine tailwinds. Ethiopia is growing, M-Pesa revenue is accelerating, the company's EBITDA margin of nearly 50% is almost unmatched in the region.
The next earnings release is scheduled for April 30th, 2026, and the results for the full year ending 2026 will be keenly watched by every investor on the NSE. But there are risks too. The government's attempt to sell its 15% stake to Vodacom is currently blocked by court orders, and that kind of corporate uncertainty can weigh on sentiment. Competition in mobile data is intensifying, and the Ethiopia operation, while improving, is not yet profitable. The stock has already given back about 6% in the 4 weeks through April 2026, a reminder that this is never a straight line. The final numbers to leave you with: current price, approximately 29.85 shillings. Market cap, 1.19 trillion shillings. 52-week high, 34.20 shillings. 52-week low, 17.00 shillings. Analyst price targets, 34 to 44 shillings. Dividend yield, 5.07%. Most traded stock on the NSE. Over 403 million shares worth 12.2 billion shares traded in just the first 3 months of 2026. That is the scale and significance of Safaricom.
Whether you are bullish or bearish on this stock, one thing is undeniable. You cannot understand the Nairobi Securities Exchange without understanding Safaricom. Safaricom doesn't just trade on the NSE. In many ways, it is the NSE. And the story is far from over. That is everything for today's deep dive into Safaricom's share price performance from listing in 2008 all the way through to April 2026. If this video helped you understand Safaricom better, please hit that like button, subscribe, and share it with a fellow investor. Drop your thoughts below. Are you buying, holding, or watching from the sidelines? As always, none of what we have discussed is financial advice. Do your own research and consult a licensed financial advisor before making any investment decisions. Until next time, invest wisely and stay informed.